So some wrapping up going on in Mexico. The G20 all wrapped up and finished. What do the leaders actually agree to, though, Will?
Well, that's the question. Of course, the Eurozone crisis was on the top of the agenda, and leaders were making all the right noises, backing big changes in the Eurozone, saying that all necessary measures will be taken to protect the euro. But perhaps the most tangible results were actually related to financing of the IMF by developing economies. And that's something that might have political implications further down the line, as Olivia Salazar-Winspear explains.
They might have been on the Pacific shores of Los Cabos, but for this G20 meet, the focus was firmly on Brussels. French President François Hollande was pushing growth in the Eurozone as opposed to austerity, a position he's held firm on. And this time there was a shift in his favour, as other leaders agreed it was necessary to kickstart sluggish economies.
We're determined to solve this crisis, and we want to do so by using a combination of fiscal consolidation, growth initiatives, and stronger European teamwork. We need more Europe, and we also need to work together.
Merkel's been under increasing pressure to ease borrowing costs for Spain. She could agree to Madrid using the European Stability Mechanism for a debt buyout. IMF chief Christine Lagarde was optimistic about what she called a pan-European recovery. And she had reason to be cheerful. Her institution will receive a boost in funding from developing countries.
We've secured an increase in resources for the IMF, not just $430 billion as we'd planned, but $450 billion. With that, we have doubled the historical capacity of the International Fund to support and loan.
A hefty contribution to the fund from the so-called BRIC countries, who've so far been snubbed by the IMF when it comes to leadership and influence. This cash injection could see economies like Brazil and China having more of a say in the workings of the monetary fund in the future. EU leaders are to meet again next week at a summit where more complex plans for the future of the Eurozone will be drawn up.
There you go. It's the latest on the Eurozone. And what about the markets? How are they reacting to the news coming out of the G20?
Well, of course, the European market's just opening up at the moment, and we can see from those first figures that things are actually falling back a little bit in Europe. There was obviously, as we know, quite a rally yesterday on hopes that the Federal Reserve might be extending its stimulus programme today. That's known as Operation Twist, of course. Will the Fed twist again? That's the question. We'll find out later this Wednesday. H&M, I should mention quickly, they've posted a good result, 23% rise in their Q2 profits, second quarter profits, citing this year's spring collection. So there you go, Stuart, just so you know. Okay. Also, Asian markets, they have been buoyed by news that Japan has had a 10% leap in exports in May. That's their biggest rise in 17 months. They're also looking forward to news from the Federal Reserve. We'll see how that goes later.
Surprised they've sold any spring clothes of the weather we've been having anyway.
True.
Still dark clouds on the horizon, though, when it comes to the Eurozone, aren't there?
That's right, and we got a stark reminder of that yesterday with Spain when it tried to sell, well, it did sell bonds on the market, but at a much higher interest rate than previously. Now, these were shorter-term bonds than the 10-year bonds, which have that 7% interest rate. But you can see, even on these short-term bonds, the rate going up there from 3% in May to over 5% yesterday. So not good news. Of course, that comes after that €100 billion bailout for the Spanish banking system, which has really not helped confidence in Spanish bonds.
Now next, fresh off the back of a strong showing in parliamentary elections, of course, France's socialist government has announced plans to tax dividends paid out by companies to their shareholders. The move has been criticised by business leaders, while the UK Prime Minister David Cameron, he's also been taking shots at French tax policy.
The candidate's campaign promises are now, thanks to the socialists' strong electoral victory, becoming the president's first steps. As early as this summer, François Hollande's government is ready to roll out a new tax, a 3% levy on share dividends. The aim is to raise €800 million, as well as incite companies to reinvest their profits. But for France's employers' union, now is not the time to hamstring an already moribund sector.
Be careful not to transform our country into some kind of enclave that's so rigid that it's completely disconnected from the market economy.
The 3% levy will weigh not on the shareholders but on the companies, and it could be music to the ears of David Cameron. The British Prime Minister has already said his country would roll out the red carpet to French companies fleeing high taxes, an intervention that drew an angry response from François Hollande's team.
It's absolutely inappropriate for a foreign leader to get involved in domestic affairs. I would say that a European Union where member states compete with each other by fiscal or social dumping, well, it's not good.
Private shareholders, the ones rewarded by the dividends, remain businesses' principal investors. France's top 40 companies paid out almost 40 billion euros last year. Big business will be watching François Hollande's next move closely.
OK, let's get some news in brief now. US regulators have criticised the City of London, saying that risky trading there could put the American economy at risk. This comes after JP Morgan Chase made a $2 billion loss on a trade that originated in its London office.
Ryanair is making its third attempt now to buy Aer Lingus. The low-cost carrier has offered nearly 700 million euros for its Irish rival, but its two previous bids for the company have been blocked by competition regulators.
And 45% of UK pharmacy chain Boots has been bought by US giant Walgreens in a move that will create the world's largest buyer of prescription drugs. The two companies are hoping to go through with a full merger in 3 years' time.
Hey, yeah, that's the latest business news from Will. You're back tomorrow, aren't you? Excellent
That's right.
stuff. He'll be here again tomorrow on France 24, and Claire has the very latest for you after the break. Stay with us if you can.